Hi guys, and welcome to this video. Today we're going to be analysing QNCX. So a bit of a different video. We're going to be analysing this swing trade ongoing for you guys. QNCX currently at around $3, so it doesn't look too bad from what I can see. It looks quite strong actually, looking at it from a first glance. So let's look at it from a technical standpoint and what is next for this stock, in my opinion. So I know this is Pedro's swing trade, so you may have a bit of a different outlook on it, but to me, what I can see, it just looks strong from what I can see. So it's all going to be technicals, no fundamentals. It's not the way I trend. It's not the way I trade. Sorry. So yeah, first thing I can see here though is when I turn my indicators back on, is that we can see the trend is strong, and that's being established from the first golden cross here from the 60 EMA, the gold line, positively crossing the 200 EMA at around the 3rd or the 7th. Sorry, the 3rd of July. So the dates are backwards, I'm in the UK. So 3rd of July, around here, 2025, we had a strengthening of trend. That was further emphasized by another golden cross, this time with a simple moving average, 200 simple moving average. Here on the basically the 18th, 17th, around there of July 2025. So we positively crossed the 200 EMA by the 60 EMA here, around the 3rd of July. And then again, simple moving averages did it, this time on the 18th of July. 2025, and that's because obviously we shot up like this, so some strength was going on around here, summertime 2025, and then since then we retraced and we've retested the golden cross in a very healthy manner. We come and retest the 60 EMA over here, riding it, and then we retest over here the 200 simple moving average on this green candle here, and then we've actually come down to retest the 200 EMA around here on the 11th of November. So it finally had its golden cross retest on the 11th of November, and then it ultimately, after its final golden cross retest on the 200 EMA, shot up a couple of weeks later. It just dramatically moved up from around 1.5 to 4.5, basically tripled, didn't it? So right now it's pulling back since that move on support. So there's a lot of strength in this. As seen, it's still holding up from the move. Basically, you know, the first read of it was around summer 2025, wasn't it, with that golden cross, and now we're in January 2026, and that's decent 5-6 months, isn't it? So it's starting to curl up on support from a retest of the 2.5 one-day support level, and a really messy golden cross retest again. So I retested 60 EMA here. It's a messy one because we've gone through it a few times, but ultimately it's held up quite well. So we've come down, gone up, come down, gone up, and ultimately built a bridge upon it, built a foundation upon it to carry ourselves now into the Bollinger Band center. So now my only issue with this is we're going to have 3.25 as a resistance, because we're now beneath the Bollinger Band center, and that means we're 65% more likely to remain beneath the Bollinger Band center. So strength will come into this once again once we get over 3.25, and once we get over 3.25, that should be a clear path towards 4, in my opinion. So that's the key level of the Bollinger Band center here, and it's also consolidating in a nice pattern since that massive run up over the course of the summer, and more so from November to December. We consolidated, nothing goes up that dramatically to the tune of plus 150% forever. It has to come down, consolidate, cool down, find some liquidity from a lower pocket. We've done that from our one-day support of 2.5 and from the messy 60 EMA golden cross retest on the daily time frame. And that's emphasized further via the falling wedge. We've got plenty full of touches per side of the wedge to show it's a mature consolidation, and it's similar to a day trading setup in terms of the fact it's a falling wedge beneath the one-day resistance of 4.25. So here though, obviously it's a swing trade, and it's going to be days we're looking at on the daily time frame per candle, and once we get over 3.25, that should be enough to bring us towards the top of the wedge around here, which is around 4, and around the one-day supply resistance area. So it looks good. On the 4-hour time frame, we've got some resistance here on the 60 EMA again on the 4-hour though, and this is around 3.1. So I wouldn't really focus too much on this. It is a bit of short-term rejection, but we need to get over 3.25 generally from that daily Bollinger Band center. So there's a bit of resistance here at 3.1. What can happen is, if we don't have the strength to do it now, we can hit our head here, maybe come down again to retest 2.5 again for another, let's see, 4-hour 200 EMA, and maybe at one point a 200 MA retest, as this might trend up and smooth out to be 2.5. But basically all this is doing is just giving 2.5 a stronger support. It's only going to keep on trending up, this 200 EMA and 200 MA towards 2.5. So it's not only just the one-day support, it's 200 EMA and 200 MA on the 4-hour time frame, where 2.5 is becoming a really strong base for support. So if we retest that level again, you know, maybe think about scaling in. Again, I don't want to interfere with Pedro's trade, but that's how I'd be thinking anyway. And again, over 3.25, this Bollinger Band Center, we're going to start trending up towards 4 in my opinion. May have a bit of a headache around 3.75, bit of a short-term confluence of resistance, but it should be no biggie, to be honest. Like I said, this has been, first case of bullish trend has been identified from summer 2025 with a golden cross, and then across November to December. Once this one gets going, it can get going, as we've seen. So it looks good. QNCX, wouldn't worry about this. Maybe beneath 2.5, maybe a bit of a worry. But if we go on the weekly time frame here, we can see it's also retested the Bollinger Band Center on the weekly, technically. It's just missed it, which isn't an issue. It's never going to be perfect. That's trading. So it's a bit off it. So once we're above this orange line, we're 65% more likely to be above the orange line. And therefore, once we break above it and come into it, we're 65% more likely to bounce off it, because we're supposed to be 65% more likely to be above it. We've bounced, haven't we, on the weekly? So again, it looks good on the weekly. So bounce off that 2.5 support and the weekly Bollinger Band Center. And if we were to get a weekly close over 3.1, that would technically be a bullish engulfing candle, and you'd expect continuation the next week, maybe up towards 3.6 around here. But my main target on this would be around 4 to 4.25 once you break over 3.25, and the weekly looks good also. So the main thing is we'll be looking at here is a weekly time frame, one step at a time. Let's get a weekly bullish engulfing candle. It's being 1, 2, 3, 4 red candles in a row for the weekly. So it's bridged it sort of. See if I had 1, 2, 3, 4, 5 green candles in a row here for the weekly, followed by 4 red candles in a row to bring some equilibrium to it. And once we get a weekly close by Friday over 3.1, then it should start continue trending back up. It looks really good in the falling wedge in the weekly, doesn't it? And yeah, it's lost the ATMA, but it should be no biggie to recover it. Again, once we get over that and have a bullish engulfing candle on the weekly, it should be good. And over the daily, for extra confirmation, to trend back up towards 4 and 4.25. Once you get above 3.25, the Bollinger Band Center, that's when you can start to get excited again on this one. And just to have a quick look at another indicator called the Money Flow Index. So it's basically a line graph similar to RSI from a scale of 0 to 100. And when it's at 100, basically, it's an index presenting that no more money can come into the stock. It's hit maximum capacity in terms of money flowing into the stock and how it's calculated. It's oscillator. And when it's 0 to 20, obviously it's massively oversold. So we've had a double bottom here on the MFI, which is good. That's good. So you can expect the breakout. You can argue it's happened now already. We've not really got any bullish divergence, as they started to trend up anyway. But yeah, it's obviously resetting the money flow index and it's coming back down. It's not overheated. Before it got to 97 around here. So it got to 97 around here, and then it obviously went up a little bit more. You never get the exact top in trading. Went up a bit more, about 20%, then came down. So yeah, and then obviously a bearish divergence was presented from here to here on the money flow index, from here to here, and that's when the peak started to get printed in really. But it's being reset. It's being reset on this one since it's a massive cascading move down to reset the money flow index, and it's also printed double bottom, which is nice, and that was printed on the 6th of January. So I'm now on the 14th, and we're starting to reverse, which makes sense, right? And yeah, it should be enough to once we get over this 3.25 Bollinger Band Center, what you see is this starting to trend back up and come back to those levels of 90 to 100 where you want to be taking some profit again. So again, 97 was around here, 3.75. So that's one way to take profit. Or when you start to see bearish divergence and it starts to trickle down a bit, you want to wait for 3 drives. So here's point 1, peak 1, there's peak 2, and there's peak 3. Your third peak is your sign to get out, and it lines perfectly, essentially. Well, it does. Your third peak was here at 4.55, which is the exact top, and then since then, you expect the bearish divergence to play out on the money flow index, and then you trickle down, lose your Bollinger Band Center, ATMA, and come into support of 2.5. But also print a double bottom on support with the money flow index, and arguably the 1-day support here. And yeah, once we get over 3.25, it looks good. The 4-hour money flow index looks strong. And yeah, one step at a time. Let's get a weekly bullish engulfing candle over 3.1. Let's get a daily close over 3.25. And let's also get a 4-hour close over 3.15 to engulf the 60 EMA here and continue trending up. And yeah, one step at a time. So the 4 hour comes first. The 4 hour close over 3.15 be good. Then closer to a 3.1 break on the weekly, so close over 3.1 on the weekly, and then eventually we'll get a close over 3.25 on the daily, and then yeah, it'll be bullish again and come up towards 4 and 4.25 with a little bit of a headache around 3.75. There is a very short-term confluence of resistance there, but it shouldn't be an issue. And yeah, so my resistance levels, I've done them on the weekly. I've got 1.5, 2.5, 4.25, and 6. I like to give myself a lot of room for swing trades in the weekly time frame for support and resistance, as I mainly look at moving averages to help for support and resistance too. So I want it too crammed of 20-30% gaps that I would use for day trading. But yeah, that's my analysis in QNCX. It looks good. You know, it's hit the bottom in my opinion, 2.5. If it does reject off 3.25, don't worry, because again, 2.5 is only going to get stronger with the support from the 4 hour, 200 EMA and MA, adding that base layer of support at that level. So yeah, it looks good pick. So yeah, I'll leave it with you here, guys. Hopefully you enjoyed this video, and catch you guys soon.